campaign. I think we talked about it a little bit earlier with you, but if Biden steps aside in terms of running for that second term, who they are most worried about running up against, Donald Trump, that is?
That's a great question. I think, after Joe Biden, it's just the uncertainty that they're worried about. Kamala Harris, I think they see as kind of a similar vibe, but it would be a very different strategy. Donald Trump being on a stage, with a woman of color and having to have a debate that's just not something that he's had to face. But the policies would be likely the same. I think they might be much more worried about a Rust Belt governor. We hear the names all the time, Roy Cooper, Gretchen Whitmer, some of the others who would potentially bring even a Governor Shapiro from Pennsylvania, just a different look and feel to this campaign that would cause them to recalibrate. But that would be a whole different scenario, guys. Now we're in an open uncontested convention in Chicago, and all bets are off. We'll have fun talking.
Rest up for Chicago, Joe.
Yeah, right. A nap or two or three this weekend. Yeah. He's not done. He's got to come back a little bit later. All right, Joe, thank you so much. Bloomberg Balance of Power co-host Joe Matthew. Next up, we're going to get into, after a rough year, podcasts are growing again. We all do podcasts today.
Yes, of particular interest to me. Looking forward to that conversation here coming up.
Before that, let's get a check on all the national news. For that, we turn to Amy Morris in D.C. Hey, Amy.
All right, thank you, Carol. President Biden says he plans to return to the campaign trail next week. But now 31 Democratic lawmakers want Biden to rethink his election bid. He's been told the campaign is having trouble raising money, and key Democrats see his time away from the campaign as an opportunity to encourage his exit. Biden campaign chair Jen O'Malley Dillon was on MSNBC.
You have heard from the president directly time and again. He is in this race to win, and he is our nominee, and he's going to be our president for a second term.
Meanwhile, White House Dr. Kevin O'Connor says the president's COVID symptoms have improved, quote, meaningfully. House lawmakers want to hear from Microsoft and CrowdStrike after today's global technology outage set off a massive IT disruption affecting companies and services around the world. Cybersecurity firm CrowdStrike says the issue was not a security incident nor a cyber attack. The company says the problem occurred when it deployed a faulty update to computers running Microsoft Windows. CrowdStrike says all Windows computers affected by today's outage should be manually rebooted. Wall Street Journal reporter Ivan Gershkovich was convicted in Russia today of espionage and sentenced to 16 years on charges of spying, which his employer in the USA has fabricated. The conviction could, though, clear the way for a prisoner swap between Moscow and Washington. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index once again very close to session lows right now at 5,500. We've got the S&P down 43, a drop right now of 0.8%. The Dow down 402, a decline of just about 1%, 40,262 on the Dow. NASDAQ is trading lower by 166 points, down now by just about 0.9%. Stocks getting hit hard at the end of a wild week. Results from tech giants set to arrive at a critical moment on Wall Street. Tesla and Alphabet among the many big names reporting next week. 10-year 4.23%, the 2-year 4.50%. Spot gold down $47 the ounce to $23.97, down 1.9%. West Texas Intermediate crude oil now lower by 3.2%, 80.18 per barrel of WTI. Again, the 10-year 4.23%, that 2-year 4.50%. CrowdStrike now down 12%. It is the company behind a massive IT failure that grounded flights, upended markets, and disrupted corporations around the world. Again, CrowdStrike right now down by 12.1%. Recapping, stocks lower, S&P right now at 5502, down 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Do want to mention one other story. Starbucks shares, they are soaring up the most in about 8 months. The stock up about 6%, excuse me. This as the Wall Street Journal reports that activist investor Elliott taking a sizable stake in Starbucks and pushing Starbucks privately on ways to boost the share price, which is boosting in today's session, again, up about 6%. We've seen activists, I feel like, out a lot, I feel like, here in 2024.
Yeah,
David.
Absolutely. We'll keep an eye on that as well through the afternoon as we get more details on that. Again, the Journal reporting that story that Elliott taking a sizable stake in Starbucks. We're going to talk now about podcasts of a special interest to me as the host of one here at Bloomberg. Last year was a rough one. Maybe even before last year. I feel like there's been a rough stretch in podcasting, but there are green shoots and signs of a rebound, and that's something that Ashley Carmen details in the latest issue of her Soundbite newsletter, which everyone with an interest in this world should read. And Ashley joins us now here in the studio in New York. Ashley, good to talk to you.
Yeah, hi.
Hi.
Talk to me about the green shoots and what you see here. I guess we can revisit the bleakness first.
Yeah,
if you want. So this was like, there was so much excitement and enthusiasm for podcasting, then a very precipitous drop, a lot of layoffs. What happened exactly? Do we have a handle sort of on what led to that downturn that we saw in recent months?
So I think to do a very rapid run here of kind of the boom and bust a little bit, the boom was Spotify really kind of kicked this off when they entered the podcast business, spent over $1 billion acquiring companies. Probably the splashiest deal was Joe Rogan for, I think, a reported over $200 million. I mean, lots of cash being thrown around. And then all of their competitors in the audio world started to want to get in the field too. So you had SiriusXM, Amazon acquiring companies, iHeart, the radio companies as well. So there's sort of was this bidding war going on, and lots of celebrities during the pandemic. I mean, it just became like a frenzy. And so about a year and a half or so ago, you really saw that a few different things happened. For one, interest rates went up. So this economy that was really benefiting people who were growing and companies that were growing instead wanted profitability. And at the time, podcasts were not necessarily profitable. Certain podcasts, at least, especially with these big deals.
Joe Rogan's doing just fine.
We don't know. But
That's true.
So that happened, and then we also saw an ad market tightening just because of fears of a recession. So podcasting is an ad-based market. That didn't help things either. And then in a really wonky twist, basically the way podcast downloads were counted was changed by Apple Podcasts, which actually was very detrimental.
Shook the whole world.
Yeah, it's, again, wonky, but like a very big change.
Remind our world, about like what changed.
Essentially, like a lot of people use Apple Podcasts to download a podcast. It's, even if you just stream it, like you press play, you're downloading the podcast.
Right.
And so Apple changed basically how back catalog episodes were downloaded. And in some cases I've been hearing, I mean, that might have reduced some shows' downloads by like up to 40%, which is a lot if when you signed this big splashy deal, you said, oh, we get, 1 million downloads a month, and actually you get 600,000 or whatever it is.
It's
a big difference, which makes it hard to hit your numbers.
So where are we today?
So
Better?
that has been the last year and a half. There was a lot of layoffs because of that, a lot of company closures and consolidation. And now you're seeing that these businesses have kind of gotten a handle on their finances. They are growing their podcast ad revenue. So the business continues to grow. Certain businesses are profitable or on the path to profitability. And we're seeing, optimism kind of return to the space, and big deals as well.
You talk, I know, to CEOs of these companies regularly. What's their perspective or their vantage on what kinds of shows are doing better or well, and where they see kind of opportunities for growth going forward?
So during the boom era, really there was kind of like these HBO of podcasting.
It's like an IP play.
Yes, exactly. Yeah. It was all these limited series, prestige-y shows. And now I would say, and this has probably been true for most of podcasting's existence, these chat shows. So, this is a chat show.
Carol.
This is it.
There's an opportunity here.
Just a note,
We'll
this will be
later.
a podcast.
We'll revisit this later.
This is it, guys.
Yeah, so like in a little lower lift, smaller budget, but also reliable, able to produce more episodes frequently, which of course is great for building audience. So those are the types of shows that I would say are still thriving right now, and probably will be going forward. But we're also starting to see the definition of a podcast expand. It includes now video. In addition, we're doing it here.
Yeah.
Right.
In addition
We're
to
at the
audio.
vanguard.
We're cutting edge.
4 platforms as we speak. Well, that, it's interesting too. And is there jockeying going on around some of the more popular podcasts, kind of shopping things around? And it talks about kind of the health of the market.
Yes.
Or talks to the health of the market.
Yes, exactly. So now the way deals are structured have changed a little bit, but these big podcasters who have existed for years are finding new homes, and it seems like they still believe they can get some pretty sizable numbers. So I've reported on the Kelsey brothers, the football players, and their podcast, as well as Alex Cooper, who's a host of Call Her Daddy. That's another really popular show. Both of them have been shopping around for, I believe, 9-figure deals.
And what do they want? I mean, how much has their appetite for certain kinds of deals or what they want out of those deals changed? I know that a lot of the deals in the past that were kind of eye-popping in terms of the compensation were like very narrow, like just on this one platform alone. Are those days done? Like, is Spotify unable to kind of keep somebody just to that platform, or?
Even the big deal is like Joe Rogan did re-sign with Spotify.
Yeah.
And when he first signed back in 2020, I believe it was, he was just a Spotify exclusive. And now his show is back on YouTube, it's back on Apple Podcasts. And I think that speaks to, again, just the recognition that this is an advertising-based medium. So you want to reach as many audience members as you can.
Yeah.
When you did say 9-figure deals, right? That's pretty phenomenal. So do the streaming services actually make money when they're paying someone or giving someone a 9-figure deal?
So I think this has been the open question.
Yeah.
I think for a lot of businesses, and it's nuanced depending on the business.
Right.
So certain companies were doing this, like for example, radio, obviously you want to diversify into on-demand versus live. If you're Spotify, you're a historically music-based business.
We just want to know if we're going to make money
Yes,
on the 9-figure
I'm still
deal
in the
that
9
got to
figures.
David.
Get back to you.
And so if you're Spotify and you're a music-based business, you want to diversify and get stop having to pay royalties on the music all of the time. And so in that way, these could be loss leaders for those businesses. But I would say now, from what I'm hearing, there's a bit more of austerity in the industry. They want to have smart deals that are profitable. They need profitability at this point.
We've got about like 30 seconds left, but you mentioned YouTube, and I wonder, like, is video the future? So much of this, I guess, is like inchoate, and no one knows, but...
People definitely think
it
it's
is.
At least an important part of it.
Okay.
So does it become videocast? What do you call it then?
Simulcast.
Simulcast.
We know
We
about
knew
that.
that.
We knew about that. It is really kind of amazing, though, right? Like, just kind of layering on these platforms, and we just kind of, what's old is new again, kind of thing.
Yeah, and things are settling out. That's my sense. I don't know. We've had so many podcasts, and some like this one are doing so well. And anyway.
Well said.
Yes,
you had
thank
to
you.
say
There
that.
we go.
Yours too. Ashley, really good stuff.
Great to
and
see
good to
you.
see, right? These cycles that go on. Bloomberg News music and audio reporter Ashley Carmen. Her soundbite column on the Bloomberg and at Bloomberg.com. I got to think, though, like I go home, I'm walking home, I throw something in my ear, right?
Yes.
Like we all do.
It's become easier. I mean, there was this barrier to entry for a long time, which was how do you download it, or how are you going to, we're talking about Apple Podcasts. Now I think more people are familiar with and able to do it. Obviously, that makes things a lot easier. So
Ours you can find at Bloomberg.com/podcasts.
very good. Shameless plug.
Shameless plug.
Yes.
All right, straight ahead, everybody, on Bloomberg Business Week. Rotations in the markets, heightened volatility. That is our market options insight. That's coming your way in just a moment.
It's 2:53 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on Starbucks shares, now up by 5.2%. And as we have been reporting, activist Elliott Investments taking a sizable stake in Starbucks. This according to the Wall Street Journal. Again, after that report, Starbucks shares up now by 5.3%. Unilever has kicked off initial discussions with buyout firms about a possible sale of its ice cream business. Could be worth as much as $19.4 billion. Its brands include Ben & Jerry's and Magnum. Some of the other stories that we're following for you at this hour: FedEx and UPS are warning of potential delays in package deliveries as the couriers grapple with the impact of that massive IT failure that is upending markets and crippling companies around the world. The airlines are getting back to normal, but UPS up 0.1%. FedEx shares higher now by just about 0.4%. Tesla and Alphabet will be among the first of the Mag 7 to report earnings this quarter. Analysts will likely press Tesla on the progress of its plans for robo-taxis and delve into the details of Alphabet's revenue boost from artificial intelligence. Tesla shares today, they're lower right now by about 4%. After earnings, we've got Netflix down 0.9%. Stock has been fluctuating for much of the day, but Netflix extended its lead over the streaming competition, adding 8.05 million customers in the second quarter and raising estimates for annual sales and profit margins. Again, Netflix right now down by just about 1%. Certainly, the company's crackdown on password sharing and the introduction of a lower price subscriber plan with advertising propelled Netflix to its second best first half. And those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, big week for the markets. NASDAQ 100 off more than 3%. The VIX above 16. A lot of rotation in the market. So let's get to Options Insight with Bloomberg News Chief Markets Correspondent Abigail Doolittle with Eric Metz. Abigail.
Thanks so much, Carol. And Eric, it's great to have you. And you, of course, are the Managing Director and CIO of Spider Rock Advisors. And you do something so unusual, which is VIX overlays into individually managed accounts. Carol was just mentioning that the VIX is back above 16 early this week. On Monday, it was at a 12 handle. So suddenly we have this spike in uncertainty, volatility. Is this hedging on the part of folks, or is it an outright bearish bet? And what is the fundamental driver in your view?
Yeah, I appreciate it, Abigail. It's always good to be on your show. There's a lot of underlying currents in the marketplace right now. There's been a massive rotation from growth to value, somewhat evident also in NASDAQ versus Russell in the last, call it, 5 or 7 business days. But yes, the VIX has definitely found a floor. You saw it earlier this year, plateau, we call it, low teens, maybe even a 12 handle, and it's definitely percolated higher. I think we're registering 17 today. And listen, I think there is a lot of, macro force in play, interest rate policy. We have election on the horizon. But at the end of the day here, VIX was low, and it tends to be mean reverting. Long-term averages are roughly 18.
Okay, so it sounds like it's normalizing. It's interesting because I was watching that VIX yesterday. It had been creeping up out of the Monday lows into Tuesday and Wednesday, and then yesterday when there was greater uncertainty around the future of President Biden and whether or not he will in fact be on that Democratic ticket, there was a sharp spike higher. And then of course we have this IT global outage. Do you need individual events like that? I mean, to me, this spike in uncertainty seems to be the idea that we don't necessarily know who's going to be at that Democratic convention in August. Would you agree with that? And what do you tell your clients in a time like this?
Yeah, I think, politics and global events aside, volatility is always present. It's just at what level. And when it gets complacent, the natural tendency is for it to mean revert, right? And so we've have a wonderful backdrop for equities and low vol almost year to date, routinely off the October, September lows of last year. I do think, the narrative in the marketplace is one thing, but at the end of the day, a lot of stocks evident by global indices were overbought.
Well, let me ask it this way. Would you be buying vol for those individually managed accounts there? In other words, do you think that the VIX is going to continue because of all of these global factors?
Yeah, I mean, listen, we're protecting clients' portfolios routinely, whether it's single securities, whether it's indices. The instruments that were performing that work vary, but largely speaking, most global equities are benchmarked to the S&P 500. So we're using a lot of index type overlays. VIX is just a derivative of the S&P vol. And so where that's relevant, it's applicable. But, at the end of the day, when VIX is low, insurance is cheap. And we will use that to our advantage. And, historically speaking, depending upon your time frame, it's still cheap.
Okay, so it sounds like there may, in fact, be a buying opportunity ahead for volatility. Eric Metz, the Managing Director and CIO over at Spider Rock Advisors. Thanks so much for joining us for Options Insight. Carol, back to you.
All right, Abigail, thank you so much. All right, folks, we're going to get ready to wrap up this hour of Bloomberg Business Week. We're going to kind of continue to cover this stuff in the next couple of hours.
Yeah, we touched upon this at the top of this hour, just sort of how this cyber incident affected so many different sectors. Obviously, a big one was aviation. It screwed up a lot of people who were trying to fly from this place to that.
Some of them still stuck.
Yes, still stuck at airports. So we'll get an update kind of on what's happening with the airlines and airports in the next hour.
Yeah, retail sector as well. Some stories about Starbucks having to do things by hand. Oh my goodness, maybe they got the names right, like for the coffees finally. Just kidding, just kidding.
C-A-R-O-L, take notes, yeah.
D-A-V-I-D. If you're watching on TV, the close is coming your way. David and I are continuing on Bloomberg Business Week. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we are live on radio, YouTube, Bloomberg Originals. This is Bloomberg Business Week on this Friday, July 19th, and we are 60 minutes away from the close to wrap up the trading day and the trading week, which has been kind of a wild one.
It's been a wild one, overlaid with so much other wild news. I mean, it feels like a particularly exhausting week, and of course, we're tracking politics, which is obviously a lot of news in that space.
Did you even remember that we're in earnings season?
I forgot that. I saw there was more today. We're looking at tech earnings still to come. I mean, it is crazy that all of that is playing. I can't focus. I feel like I'm constantly being pulled in one direction or another. You're going to keep us on track. You're going to keep us on the straight and narrow, Carol.
Don't count on me. Don't count on me. I'm Carol Masser along with David Gora. Of course, he is the host of the Bloomberg Big Take podcast here at Bloomberg. Tim Stenevec is out today. So coming up, we're going to talk a little bit more about the outage. We're also going to get into the retail world. We're going to also talk about, you and I have both talked to a lot of CFOs. Turns out more of them are getting the CEO job.
So fascinating. I was doing an interview with the CEO and the CFO of Johnson & Johnson recently, and this is something that came up, that CEO not going anywhere anytime soon, but just talking more broadly about what you're touching upon, which is that, they're seen now as great prospects to run companies. Why is that? What makes them particularly gifted for that? What about this moment makes a CFO so appealing for that job?
All right, looking forward to that. It's a subject of a column. And then we're going to get into luxury automakers pushing hybrids. It's not necessarily all about EVs. I need an IV right now. All right, we're getting ready for the weekend. Take it away, Charlie Pellet. Tell us what's going on in the trade.
All right, got to begin with CrowdStrike. That stock now down by 12.8%, moving lower on this Friday. 59 minutes to go until that closing bell clangs on Wall Street. We've got you covered with the S&P down 32 right now, 55.12, drop there of 0.6%. Very curious to see whether we close above or below 5,500. The Dow right now down 350, a drop of 0.8%. The industrials 40,313. NASDAQ down 115 for the NASDAQ Composite Index, a drop now of just about 0.7%. NASDAQ 100 Index down 0.7%. Broad-based selling, a lot of red. Russell 2000 down 0.5. 10-year yield 4.23%. The 2-year 4.50%. Gold hit hard today, down 1.9%, lower by $46 the ounce to $23.98. And West Texas Intermediate crude now down 3.2%, $80.18 for a barrel of WTI. Lots of debate, lots of speculation about the July Fed meeting and if policymakers will use it to set the stage for a September rate cut. Veronica Clark is Director of Citi Research at Citigroup Global Markets, and she was interviewed this morning on Bloomberg Surveillance.
We're getting increasingly close to the start of Fed cuts. It does look like we're going to get that first rate cut in September. Obviously, we'll have a meeting at the end of this month. Maybe we'll get some kind of signaling of that. But yeah, we do think rates are coming down. I think markets are starting to price our base case outcome that the Fed is actually cutting every meeting this year.
Veronica Clark of Citigroup Global Markets. By the way, you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. CrowdStrike front and center, worth repeating, down almost 13% right now. It is the company behind that massive IT failure. The grounded flights, upended markets, and disrupted corporations around the world. CrowdStrike, of course, the dominant supplier of software that protects businesses from ransomware attacks. Recapping stocks lower, S&P down 31, drop there of 0.5. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thanks very much. David Gura here in for Tim Stenivek with Carol Masser on Bloomberg Business Week. And as Charlie said, markets down this afternoon. It has been a crazy week. I feel a little worried to review it with still an hour to go before the end of trading, but we should. I mean, I was thinking like Jay Powell, Fed chair, sitting down with David Rubenstein of the Carlyle Group, of course, host of many shows here on Bloomberg as well. And that was just this week.
That was Monday. Is that
nutty?
nutty?
Process the fact that happened on Monday of this week. Seen a market rotation, tech sell-off, and then, of course, we've had this IT crash that's been kind of permeating all aspects of the markets today. Some big earnings as well. Here to help us navigate all of that, Abigail Doolittle, Chief Markets Correspondent. Yes, here at the Interactive Brokers Studio, Bloomberg Interactive Brokers Studio. Abigail, let's start with the IT fallout. And we were talking last hour about the effects on CrowdStrike, obviously, and Microsoft. What have you seen as we've kind of noted the way that this has affected the way that we live our lives? How has it rippled out in markets today?
Truthfully, it really has not rippled out all that much. I would say it was more of a headline event earlier this morning and probably a shocker to most people to wake up to that and wonder what it is. Now, if you're a CrowdStrike holder, it's a different story. Those shares are down 13%, down about 20% on the week, the worst week since November of 2022. Microsoft is also under pressure, and it has been under pressure this week as we have seen that rotation out of big tech. So yeah, again, I think it's more of a headline event. To me, more so this week has really been about the political scene, also geopolitics. It was really interesting that the Biden administration earlier this week would have floated the idea of that policy that would, basically penalize companies that had American parts related, the FDPR related to China. Let's just boil it down
to semiconductor.
Chips related to China. Strategically, it just doesn't make that much sense from the standpoint that you're going into this election. He's already having a lot of sentiment issues coming out of that poor debate. And you had to know that that was going to hit the market. Now, typically, stock markets go higher into elections, and that is the truth right now. We are higher on the year, but this kind of a wobble. But that's certainly a big piece of this week because NVIDIA, one of the big market drivers right now, is just hanging on to a support level that we've talked about before in the past, right above 118. If below 118, we're probably going to see NVIDIA go sub 100. Should that happen, that's going to bring the chips down. NVIDIA, by the way, still down about 15% or more from its recent peak. And now this week, you're also seeing some of the other mega cap techs come down with it on sentiment. And I would add one more thing. So with the pick of J.D. Vance, he has openly said he's not a big fan of big tech. He's more a fan of VC and smaller tech. There's a lot of companies out there that if he were to align with Khan in the FTC, you could really see some of these Amazon, Meta. I mean, there's a lot of prime examples there. So I think that that's been a pressure on big tech too. But also, you just have the NASDAQ 100, these stocks up so much that it doesn't take much to knock them off that perch.
Carol, one of the many contradictions of J.D. Vance is that he is an admirer of Lena Khan.
It's
absolutely.
So
I am as well, actually. She's incredible. I don't necessarily agree with her Amazon policies.
She's impressive.
But from an intellectual standpoint, she's almost my hero. Now, from a practical standpoint, what she wants to do with Amazon, it doesn't really make sense because at the end of the day, to create more competition, you hurt the consumer.
Right.
But intellectually, she's fascinating. But what's more fascinating is that he also loves her. I mean, they both went to Yale Law School, so maybe there's some sort of a.
But he's not president, so I'm assuming.
Wow.
Forgive me.
Wow,
I'm in trouble now. But assuming, let's just say. Play that one scenario. If Donald Trump is back in the White House, it's not, you do wonder about the conversations they have, but it's ultimately Donald Trump.
It's ultimately Donald Trump, but you have to imagine that he strikes me as somebody who's listening very closely, and this is probably not the view of most people here at Bloomberg, but he strikes me as somebody, especially in a second term, that he's going to be listening. He's strategically placing people around him. He's going to be listening to them to get things done. And so I think that, J.D. Vance will have his ear, and I think that Together they make an interesting chicken in a lot of
Mark
ways.
Mark Zuckerberg, I can't use the word on Bloomberg
yes, it's interesting.
Week, but he seemed pretty complimentary.
He did. Well, now you're seeing this shift, you know. So Elon Musk was first in terms of, and you know, some of these other tech folks out in Silicon Valley. Not that Elon Musk is any longer in Silicon Valley. He's very, he's very clearly down in Texas. But yes, there seems to be a shift, and it does make sense from a business standpoint because the former president is talking about 15% tax cut rate if that 2017 tax plan does expire in 2025, no matter who's elected. If nothing happens, it goes back up to 35%. The Democrats want it to go to 28%. So you think 15%, 28%, what's more attractive? I mean, it doesn't, you know, less regulation. There's a lot of different factors that from a business standpoint.
It's also like a campaign, right? Like there's lots of promises that are made, and then ultimately you have to get the job and do the job, and it's not always a straight path forward. Having said that, before you go, anything interesting? I'm looking at the NASDAQ 100 down almost 4% for the week. The SOX is down 8% for the week. I mean, these are pretty dramatic, significant moves. Anything on a technical basis that has changed kind of market outlook here?
Well, what's interesting is you have a lot of these indexes right down on their 50-day moving average, similar to NVIDIA, so they're really just following. If that support doesn't hold, and the 50-day moving average is a fancy way of saying that represents a level where the near-term buyers are. If the SOX, the chip index, if NVIDIA goes below that, if the NASDAQ 100 goes below that support level, it tells you the near-term dip buyers, well, they're not here. They've folded. Really fascinating to me this week. What stands out the absolute most is what we were just talking about with Eric Metz over at Spider Rock. The VIX back at a 16 handle. And honestly, yesterday, there was some chatter here in the newsroom and elsewhere around President Biden's future. And that's when that spike happened. So that uncertainty of who is going to be on that Democratic ticket. And now from a predicted odds level, we have Donald Trump at 63%, Biden's around 14%, but Kamala Harris is now at 31%. That's fascinating.
All right.
That uncertainty not going away.
No, that VIX is going higher. Eric Metz's clients will do okay.
There's going to be a lot of volatility. All right, Bloomberg News Chief Markets Correspondent Abigail Doolittle, thank you so much. All right, one other sector of the market that we've been watching closely today is the airline group. And I'm looking at the S&P 500 Supercomposite Airlines Sub-Industry Index. Was down almost 2%. Right now it's up about 0.9%. Around noon today, the FAA put out a post on X, David, that the global IT issue could continue to affect flights this weekend, and that it's still working with airlines to kind of closely keep an eye on the issue.
This is airlines begin slowly resuming some operations following that widespread global software meltdown. Thousands of people delayed on canceled flights, likely to cascade through the systems for days, as the FAA said. Airline stocks as a whole down 1.9% earlier today. With more on this aspect of the global IT outage story, we welcome in longtime airline industry analyst Helene Becker, TD Cowen Managing Director and Senior Research Analyst. Let me just start big picture here. This is something I think it's safe to say the airlines must have been fearing, and just give us your perspective from your vantage of how disruptive and devastating this has been for airlines.
Yeah, thanks for the question. So it disrupted operations, as you noted, all day. And because there will be crews out of place and aircraft out of place, it'll probably cascade into Sunday. I would say Friday and Sunday are probably the worst 2 days to have issues, because those tend to be the days when we see the most number of people flying, especially a summer Friday. So I know the airlines were offering waivers if you wanted to change your plans, but pragmatically, if you're going on vacation today, you kind of want to go.
That's summer Friday. You're not going to forfeit the summer Friday. That's the whole point.
Yeah. So I guess, I'm hearing reports that airports are starting to get aircraft out. Airlines are getting aircraft out. Obviously with massive delays. So I would say before you go to the airport, check your flight status. But that said, they're going to do their best to get you where you want to go.
Do you anticipate any kind of financial impact, material impact here out of this? Excuse me. Yeah.
Yeah, no. So we're going to treat it as if it was a storm, sort of a winter weather event or a summer thunderstorm. And there will be, a little bit of an impact for sure, but we're early enough in the quarter that they'll be able to recover. And also, since almost 3 million people are traveling on Fridays and Sundays these days. If you're starting your vacation, you're going to still persevere. And if you're ending your vacation, you obviously have to come home. And same with a business trip. If you're ending a business trip, you have to come home. Not a lot of business trips start on Fridays.
Fair enough. The good ones.
That's right.
Not.
That's so true.
Helene, you know, I was.
I was thinking that Farnborough starts Monday.
There you go.
A few trips that started on a Friday or Saturday.
I'm not going this year, but a lot of my friends were leaving tonight.
A few extra days in London. You know, I was just in Atlanta, and while waiting for my plane, I looked over, and I love when there was a dot matrix printer at the gate, and I'm always so amazed at the longevity of the dot matrix printer, particularly in airports. But I bring this up to say, how old are these systems? How outmoded are these systems? If we're to step back and look at any kind of broader takeaways of what's happened here, does it say anything about how good this infrastructure is? We were talking earlier with Mandeep Singh just about how people are running all kinds of versions of Windows. I don't know if they're running Windows 95, but no one's on the same thing or the most modern thing. And I always feel that particularly acutely when I'm at the airport. It feels like the systems that a lot of these airlines are using are pretty outmoded.
Yeah, you know, that's another good observation, actually, because Southwest was one of the least impacted airlines today. And as most people know, they have one of the oldest systems out there. So thinking about it over the years that, and you pointed out, I've been doing this a long time, airlines were early adopters of technology. And then because of all the issues they had and the bankruptcy filings in the last, now it's 2 decades ago, which is kind of shocking. But with all those issues, they weren't able to necessarily keep up. And they've spent the last 4 or 5 years, especially using the time in the pandemic, to start upgrading their systems. And so I know that most of the airlines and a lot of the airports were caught out by it. But, you know, in fairness to them, they're doing everything they can to push information to the customer. I think United is probably on the leading edge of this. They rolled out earlier this month the traffic, the weather app that they're using to show you, because it's sunny where you are and it's sunny where you're going, but there's thunderstorms in between. So they're pushing that to people's cell phones now. And they're doing their best to keep up and get ahead of technology. But to your point, some of the systems are just slow to be updated. The dot matrix printer being one of them.
Oh my God, I want a new headline on a story. Yeah. Well, the dot matrix printer aside, I mean, it's safe to say, though, increasingly, you know, there is a lot of technology still, though, when it comes to the airline industry. Do you anticipate, Helene, that we're going to see more incidents like this, potentially?
Well, I don't. I'm hoping not, of course, but it seems like there are always issues that aren't necessarily their fault, that they're a victim, and they weren't the only ones, right? I mean, you guys have been talking about this all day. There have been other industries. Banking was very affected. I know when I logged on this morning, I didn't have any issues, but it was just an accident of timing. I was a little late this morning, so by the time I logged on, the issues had been resolved within our firm. But in general, I think the industry is going to continue to invest in technology, and they're going to use every tool available to try to keep their aircraft running on time, obviously a safe operation, and so on. And so will these incidences continue to occur? Of course, because it's not only airlines that are always affected, there are other industries. And as long as we all rely on so much technology, we're going to be exposed. So I don't think there's anything you can do about that. But when you think about the millions of flights that we have on a monthly basis, on an annual basis, the system is still working pretty well, and the industry is still investing. I think each of the big airlines probably invest close to $1 billion a year in technology, and then above and beyond what they invest in aircraft CapEx. Right. So I don't think that's going to change.
All right, we're going to leave it there. Hey, listen, thanks so much for carving out some time for us. Have a great weekend. Always good to check in with Helene Becker. She's Managing Director, Senior Research Analyst over at TD Cowen, joining us in New York City. I'm looking at airline stocks, David. They're actually, as a group, up about 1.1%.
Interesting. How about that? Treating it like a storm. I thought that's my big takeaway from that. Just seeing this as kind of an anomaly. Very cool.
I feel like things are just bouncing back so quickly. Yeah. All right, everybody. You are listening and watching Bloomberg Business Week. Next up, we're talking retail.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We are well off session lows, still looking a lot of red on the screen. 39 minutes to go ahead of the closing bell. Stocks getting hit hard at the end of a wild week. Results from tech giants set to arrive at a critical moment next week on Wall Street. Tech losses leading in the S&P 500. The gauge poised for its worst week since April. Right now we got the S&P at 55.19. That is a drop now of 25 points, down by about 0.5%. The Dow down 301 points, down 0.7%. The Nasdaq Composite Index down 89, a decline of 0.5%. Russell 2000 Index of small cap shares trading lower by 0.4%. 10-year 4.23%, with a 2-year that's now yielding 4.50%. Gold down 1.9%, $23.98 the ounce. West Texas Intermediate crude down 3.1%, $80.22 a barrel. And Bitcoin now surging 5.2%, 67,114 on Bitcoin. As for the overall market backdrop, Kara Murphy is Chief Investment Officer at Kestra Investment Management.
We've had 18 months of the market being driven by a handful of names who are heavily levered to the semi sector, right? And earlier this week, we saw what happens when all of a sudden they stumble. And it wasn't a huge stumble, right? They still have great businesses, they have great earnings power, but I think the market has become overly reliant on just a handful of names. And in order for this market to remain healthy, for the bull market to continue, we have to see that start to broaden out.
Kara Murphy of Kestra Investment Management. Unilever has kicked off initial discussions with buyout firms about a possible sale of its ice cream business. Could be worth as much as $19.4 billion. Unilever down 0.1%. Those brands, you know them well, Ben & Jerry's and Magnum. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It's Friday ice cream day, right, here at Bloomberg?
This is a funny facet of this company. There is ice cream every Friday, and here we are unable to get any of it, so it's particularly torturous here.
Hint, hint to everybody in the control room. Just watch Charlie will run up there and he'll come down a bunch. Don't do that, Charlie. All right, as we continue our coverage of the global IT outage, hey, listen, one other area that we were thinking about looking at, and it seemed to be impacted, was retail. There was a story in the Bloomberg. Starbucks online system order ahead on mobile apps appeared to be down this morning, so workers were having to actually take orders by hand, David.
Take orders by hand. Other reports mention grocery stores, retailers, fast food giants affected around the world. I think I saw in one Bloomberg News article at a hotel in Hong Kong, they were checking people in by hand, which
it's like,
you don't usually see at big corporate hotels.
How do you open doors?
How do you know what's, yeah. I think that's, just to digress a little bit, what gives me the most pause is just to think through, like, in our line of work and other lines of work, what would you have to do if you weren't able to get online or get access to your systems?
I always say this to my husband because increasingly, like, all of our systems are online, like turning on lights, turning on this, turning on that, and I'm like, what happens? Like, as things go down, like, kind of our world stops.
The Bloomberg performing without missing a beat. I just want to point out, I will say, kind of shamelessly, but no issues for us here. Yeah.
All right, so let's talk a little bit about what's going on in the retail world. Nikki Baird is with us. She's Vice President of Retail Innovation at the retail technology solutions company Aptos. They work with companies from Crocs, Cole Haan to LL Bean and Michael Kors. Nikki joining us from Denver, Colorado. Nikki, good to have you here with David and myself. I was going to say Tim and myself, so sorry about that. I'm like a robot. David and myself. How are you?
Good. Definitely watching all the news roll in about the outage myself.
I am curious, you guys work with a wide swath of the retail group. What are you hearing from the retail world in regards to the outage?
Yeah, it's really been kind of all over the place. Like, from our perspective, it's been a very limited impact. And it's mostly up to kind of the configuration and the setup of our clients, the choices that they've made, as opposed to like our ability to deliver solutions. So, we definitely, with point of sale in particular, you really have to think about how you handle things when things go down and whether you got to pull out the calculator and the notepad in order to figure things out. And so, we really have focused on that offline resiliency. Even if the store had that kind of trouble, we'd still be able to transact. That's a really important part of delivering point of sale solutions these days.
Nikki, I wonder what happens when you have an event like this to the trust that consumers have in the businesses that they're dealing with, the retailers that they're transacting with. Do they take a pause? How do retailers kind of combat that, acknowledging the fact that a lot of them are using this kind of third-party endpoint software to keep their systems secure? Of course, by doing that, acknowledging the fact that, like, other companies are in their systems, making sure that the systems are secure. I imagine that there's a fine line to toe there for these companies.
Yeah, I think we see a lot from like the data breaches, for example, that companies take kind of an immediate hit. But when they kind of go through their rehab, their public rehab, then consumers come back. So whether that's fortunately or unfortunately, I'm not sure what to say about that, but consumers' memory tends to be pretty short. So unless it is repeated issues or unless those issues are so egregious that, it wipes out everybody's bank account, it'll come back. I don't really think it has a huge long-term impact on consumers' trust, particularly of retailers who are taking their credit cards and making payments.
Hey, I do wonder too, Nikki, any of your systems, you guys at your company that were impacted? No.
We had very, very limited impact. Yeah, I think we had a few customers who had some minor issues with some back office computers in stores themselves, but It wasn't from like our solutions and how they're delivered. It was really from their own use of the technologies that were impacted.
How are you guys, though? What are the discussions you're having at your company, though, because of what happened, and maybe thinking about the different strategies or protecting the solutions that you provide to make sure nothing like this happens in the future?
Yeah, we're very, very active. We have multiple people, and we have a critical response team to really jump on all of those things whenever something like that happens. I think, we definitely spend a lot of our time preaching on IT industry best practices. Don't auto update things. You might want to pause before you auto update, but it's hard with security because some of those things are so urgent that you almost do want to turn on the auto update. But when you do things like that, then if there's anything that goes wrong, then you aren't doing anything to stop it, and you've got to roll it all back. So we spend a lot of time really focusing on kind of IT best practices to help protect yourself from some of those automated things that happen as much as possible.
Nikki, I want to step back and just ask you sort of what's front of mind for retailers right now. We're in mid-July. The school year, sadly, is around the corner. I can't even believe that. I feel like I just got my kids out of school, and now we're talking about back to school. But how much is that kind of the marquee item on retailers' calendars right now? How much emphasis are they placing on that, and what does it mean for the sector more broadly?
Yeah, absolutely. It's definitely important. We have some retailers that, normally there's, from a technology perspective, a holiday freeze, right? So starting in mid-October, maybe they won't have any changes that get rolled out to stores because they don't want to impact their ability to deliver on the holiday season. Well, we have some retailers that also do that same blackout period for back to school. It's that important to them, and they do not want anything that will impact that. So it's definitely become probably the second most critical holiday event for retailers, not to call it a holiday, because I'm sure kids don't think that, but it's on that level of holiday spending.
I don't know. My daughter kind of enjoyed all the back to school shopping. It felt like a holiday. It felt like Christmas 10 times over, to be quite honest with you. Hey, having said that, you have a great window into the retail group, which we know how important the consumer is to the economy. What would you say what are you hearing from most retailers, how things are going? Because we keep talking about how consumers are looking for value.
Yeah, I think that is definitely very much at play. For sure, the back to school spending really kicked off earlier than ever this year. And I think we saw that in consumer surveys as well. We're seeing it in the stores. Consumers are shopping early, but they're shopping early looking for those deals. So I think there's the whole Amazon Prime Days and all of the retailers like Target and Macy's and Walmart who kind of piled on around that Prime week. They all are trying to take advantage of the fact that consumers are shopping earlier for back to school to kind of get in front of those deal seekers. But that said, I think most of them are really trying to cherry pick up front and then also trying to look for those deals as they get towards the end of the season, which for back to school is a little bit more challenging for retailers because it's not like there's one day like Christmas Day where you have a deadline and if you don't hit this day, it's over. For back to school, it kind of spreads across the end of August, beginning of September, sometimes even as late as mid-September. So there are more opportunities, I think, for consumers to kind of spread that spend out a little bit if they need to.
Very quickly here, I wonder if you're seeing signs of any strain on consumers. And so we talk about so often is what the Fed's thinking and what it might do and sort of how its war on high inflation is affecting consumers. Are you seeing them strained, and are companies doing anything particularly interesting as a result?
Yeah, the promotions are back on deck for sure. We saw it earlier in the year with some of the restaurants, fast food, kind of bringing back their meal deals and things like that. And I think, my company focuses on apparel companies, very much so the fashion industry. And we've seen the same deal that you've got to be pretty targeted in your promotions, and you've definitely got to offer value in order to get customers. I think one of the things with back to school in particular is that it is a very unique store traffic opportunity. So as you mentioned, Carol, right, you want this to be a really great experience for your kid. You want to take them, you want to have them pick the backpack, you want them to be emotionally invested in the new school year. And that's a particular opportunity to take advantage of that traffic, both in the moment, but also to put together a really great experience that could lead to holiday spending down the road.
I'm just going to say, Nikki, what I wanted it to be is one store and not like a parade of
You were
stores.
going to pick that backpack. You were going to fill it and give it to her.
No, I have to have this one. No, this one's just fine. Nikki, thanks so much. Good to check in with you. Nikki Baird, she's Vice President of Retail Innovation over at Aptos. Coming up, the presidential race, trade and the IT outage impact. We drive to the close on this Friday. Yep, folks, it is a Friday. First up, though, back to World and National News and to Amy Morris. She is in D.C. Hey, Amy.
Hey, Carol. President Biden remains isolated at home with COVID. Democrats at the highest levels still making a push for him to rethink his election bid. 33 lawmakers now, Democratic lawmakers, openly calling for Biden to step aside. He says he plans to return to the campaign trail next week. Campaign Chair Jen O'Malley-Dillon on MSNBC.
We are about to head into our convention. We're about to head into, the delegates of this party who are there for Joe Biden. Those delegates are going to nominate the president as the candidate moving forward and as our nominee, and they're staying with the president.
And the New York Times is reporting Vice President Kamala Harris is ready to speak with some major Democratic donors. Lawmakers would like to hear from CrowdStrike and Microsoft officials about today's global IT outage. They're planning for hearings on Capitol Hill. Computer systems at airlines, banks, and businesses around the world were disrupted after a botched update of the cybersecurity program took down Microsoft. Bloomberg Intelligence Senior Technology Analyst Mandeep Singh.
The good thing for them is it wasn't a cyber attack. It was an outage because of their own code changes, and they have rolled it back. So that, I think, makes it short-term in nature.
Bloomberg Intelligence Senior Technology Analyst Mandeep Singh. CrowdStrike says all Windows computers affected by today's global IT failure will need to be manually rebooted. Things are coming up slowly now. Wall Street Journal reporter Ivan Gershkovich has been sentenced to 16 years in a Russian prison. He was found guilty of espionage. He has denied any wrongdoing. The Wall Street Journal has called the case against him a sham, and the U.S. government has said Gershkovich was wrongfully detained and condemned the charges. Now, this conviction, though, could open the door to a prisoner swap with Russia. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index, 20 minutes to go. Very close to session lows. The Dow, the S&P, NASDAQ 100 index, Russell 2000, all very much in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
Hey, good afternoon, Charlie. As you said, stocks are lower and adding to weekly losses with the S&P 500 on pace for its worst week since April. The Dow is down more than 300 points, S&P lower by 40, with the NASDAQ dropping 110 points. The U.S. 10-year yield is at 4.24%, and small caps are down 5. 7 of the 11 main S&P sectors are in the red, with energy and materials providing the biggest drags, while healthcare is the group's top performer. NASDAQ biotechs are little changed. Transports are up 40. Semis are down 120 points, while the VIX is higher by 2%. Leaders in the Dow, Merck, United Health, and Amgen, while Travelers, Intel, and American Express are the worst performers. CrowdStrike sank more than 10% after a global IT collapse that impacted banks, retailers, and airlines. Rivals including SentinelOne and Palo Alto gained on the news. Meanwhile, Starbucks jumped the most since November after a report activist investor Elliott bought a stake. And on the earnings front, Intuitive Surgical jumped nearly 10% to a record high after second quarter earnings beat. And wrapping things up, SunPower plunged more than 50% to a record low as Goldman Sachs analysts said the stock is worthless. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey. Have a great weekend. And to hear live breaking news over your Bloomberg, type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody. You are listening and watching Bloomberg Business Week. I'm Carol Master. Tim Stanovic is off. With me is David Gora, and we've got about 18 minutes left in today's trading session, bouncing around off our lows of the session, but not too far off. And you've got most of the major industry groups in the S&P 500. Now, 9 out of 11 are lower in today's trade. So a lot going on, as we keep saying. I feel like a little bit of a broken record. I'm very happy it's Friday, getting ready for my glass of red wine. So let's get to it, our drive to the close. Tracy McMillan is with us, Head of Global Asset Allocation Strategy over at Wells Fargo Investment Institute, joining us from Winston-Salem, North Carolina. Tracy, there is so much that we could, start with, whether it's the presidential race, whether it's the global IT outage, whether it's earnings, Fed policy. What matters most to you right now on this Friday afternoon?
You're right, Carol. There is a lot going on right now. And I think for us, the most important thing is to continue to advise investors to look at their portfolios and those stocks that have outperformed the most so far this year. And that's going to be stocks in information technology, communication services. Take gains there and reallocate into those sectors that should benefit due to the earnings recovery as that continues through the end of the year. So those are sectors like industrials, energy, materials, healthcare, and financials.
You mentioned information technology. We were talking about NVIDIA, kind of recent rough road that it's been on. Something that's always of endless curiosity to me is when that enthusiasm for AI moves to smaller companies in the space, and we see kind of secondary and tertiary effects of that. Are you seeing that when you make those recommendations? Are you suggesting any of that money go into other AI companies, or are you really kind of making counseling a more defensive play?
Yeah, so you're right. AI has certainly driven a lot of the returns so far this year, and it's been the mega cap AI companies. And as AI continues to proliferate and the build out continues, we think that the benefits to investors will move from that direct investment in technology names two peripheral types of sectors that should benefit as data centers are built out, as energy uses, electrification, continues to be needed. So we do think that that's kind of the next play, and that's where we're asking investors to focus their assets.
Having said that, Tesla reports next week, Alphabet reports next week. So if we get, I'm thinking about Alphabet in particular, some upbeat numbers from Alphabet, do you rethink kind of that big tech story? Because I feel like just when everybody says we're done with big tech, all of a sudden something happens and we all go roaring, or you see investors moving a lot of money back into the sector. So I don't know, how do you balance that?
Yeah, so the way that we're playing that right now is to be neutral technology. And what that means for a U.S. large cap investor who is neutrally indexed, that's about 1/3 of their U.S. large cap exposure. So that's a lot of exposure to technology. We just wouldn't be overweighted here. And because these stocks have done so well, that's exactly what we're seeing in a lot of portfolios, is that it's more heavily weighted than the index. So that's where we're saying pair some of the holdings, pair some gains, and reallocate to other areas. Not that we don't see technology continuing to perform well. It's just that there's a lot of risk there when the performance gets as concentrated as it's been so far this year.
Tracy, Carol started off asking you sort of what's top of mind for you. Let me turn that question on its head. And what's top of mind for your clients when they come in to you worrying about what they should be doing, curious what you would advise them to do? By and large, what are they asking about? What are they saying? And sort of how often do you have to set them straight? Or what's the most common kind of misconception that investors, that your clients have right now?
I'd say right now it's probably wanting to reallocate based on the political environment, wanting to reallocate based on who is leading in the polls. And we are telling investors that they should not make significant changes to their portfolios based on what is happening right now in the polls, that it's much too soon to make any changes to the portfolio. We've certainly seen some very extraordinary headlines coming out of this race so far. Lots of twists and turns. It's a long way to November. We just think it's speculative at this point to be investing based on what might happen at that time.
Tracy, is there a point though in the race, I don't know, 2 weeks out, a month out, like where you really look at the polls and you say, all right, guys, it's, hey, clients, it is time to make some adjustments?
So we probably would want to wait until we get more confirmation about, who's at the top. At the, who is the presidential candidate who has been elected, and then we'd want to see how Congress also has shaped up after the election. So it's really the total picture that may help us to direct clients to certain sectors, certain industries that might benefit more based on what policies are likely to come to fruition.
Just have a couple seconds left here. I wonder, when you look at the wide swath of economic data, what's most important for you as you kind of game out what the Fed might do, sort of where things are headed? What do you pay closest attention to?
Yeah, we're really paying closest attention to three things. There are three things that we think have been supporting these markets, and two of the supports are starting to weaken. One is the labor market. That has started to weaken. Financial liquidity is also less ample. And then the third thing is inflation. And with inflation falling, that we think leads to better purchasing power for investors, lower rates, better credit availability. And that scenario to us tells us that we're probably going to see a shallow decline in growth, followed by a reacceleration next year.
Interesting, right? So touch and go, it feels like. Yes. Tracy McMillan over at Wells Fargo Investment Institute, thank you so much. Quick headline, crossing the Bloomberg, the FTC, Federal Trade Commission, investigating whether executives at major oil companies, including Hess, Occidental and Diamondback Energy improperly communicated with OPEC officials. We are seeing Hess and Occidental trade lower in the session. You are listening and watching Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Starbucks shares now up by 6.4% after the Wall Street Journal reported that activist investor Elliott Investment Management has built a sizable stake in the coffee chain, citing people familiar with the matter. Again, we've got Starbucks right now pushing higher. Starbucks up by 6.5%. Unilever has kicked off initial discussions with buyout firms about a possible sale of its ice cream business. Could be worth as much as $19.4 billion. Unilever down now by 0.1%. Unilever's ice cream brands include Ben & Jerry's and Magnum. Netflix extended its lead over the streaming competition, raising estimates for annual sales and profit margins. Geetha Raghunathan is a media analyst with Bloomberg Intelligence.
They added 9 million subscribers in the first quarter, and they followed that up. You know, it was a tough act to follow, but they followed it up really nicely with 8 million subscriber adds in the quarter that they just reported, which was 65% over consensus. And it's not just that. I mean, Netflix has been steering the conversation away from just subscriber trends, right? The subscriber trends have always been the dominant theme, but now they're kind of trying to change the narrative to a story that is rooted around industry positioning, around compounded revenue growth, as well as expanding margins, and they are checking all the boxes.
Geetha Raghunathan, and again, we do have shares of Netflix down by 1.8%. Sun Power shares plunging as Guggenheim Securities cut the solar equipment firm's price target to 0 and said the stock may soon be delisted. SunPower right now lower by 54.7%. And those are some of our top company stories at this hour. I'm Charlie Pellett, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we are so ready to wrap up the trading day and the trading week. I just got about 4 minutes left in the trading session. Charlie breaking down the numbers. I'm Carol Masser, along with David Gore. He's in for Tim Stenevec on this Friday, so we'll head over to our TV colleagues in just a moment. You shared a story, you kind of like this, about, well, the hurricane season coming up and maybe better ways in terms of forecasting.
Yeah, just a fascinating piece. I mean, this is supposed to be a pretty dramatic hurricane season from everything that we've heard from NOAA.
Dramatic, not in a good way.
Not in a good way. There are going to be a lot of them and bigger ones still. And the piece centers on startup companies that are doing a lot with weather balloons, kind of old-fashioned technology, but using the data that they're able to collect from these launches to put them into big AI models and hopefully improve the kind of forecasting that they're able to do. So they're doing that on their own. We don't have a whole lot of insight into sort of what they're finding with their data, but we know that one of them in particular is working with NOAA to improve their forecast. And what we've heard from that government agency is when they've put that data into the old models, the predictive power of them is like dramatically better. So I think it's a fascinating example of how AI is working, but also what might protect a lot of people, because you've covered hurricanes, I've covered hurricanes. The uncertainty can mean life and death to people who are out there.
I was telling you off air, my husband and I sail and we watch these YouTubers, and it's unbelievable how they time, especially when they're crossing, oceans and going around the world. They wait for those weather windows and they're pulling in all the different models and they're waiting and watching everything. And the better the information, or the information has improved so dramatically. But you think about something like this, how it could change it.
Yeah, so this piece by Brian Kahn and describes these air balloons, weather balloons, as kind of looking like a jiggling jellyfish up in the air. Again, this is kind of like old-timey technology. But you and I talk about how AI is this bonanza, people are piling into it, and there is all this speculation about what you might be able to use it for, what it might change, what it might make better or worse. Here, I just love this as a really concrete example of actual information is being collected and modeled, and things are changing or likely to change as a result. And I should say, he centers this piece on one company, Windborne Systems, but a lot of companies in this game trying to find new ways to collect data on weather in particular. And I've been talking about NOAA, that agency, coming up with its own AI models as well. So we'll see where that takes us. I mean, I think weather forecasting has gotten better.
It's definitely gotten better.
Yeah.
The long-term goal, they say, is to have 10,000 balloons aloft at a time, collecting a wide range of data and bringing a greater understanding of what's happening in the atmosphere.
Very cool.
That's a lot of balloons. All right, everybody, do not go anywhere. We're getting ready to wrap up the trading day, the trading week, heading to our TV colleagues. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about 2 minutes away from the end of the trading day on this Friday. Scarlett Fu and Shonali Basak here. And of course, here to help us take you through the closing bell, we've got a global simulcast. And that means Carol Masser and David Gura in for Tim Stenevec joining us. And of course, by doing so, we bring together everyone, Bloomberg Television, Bloomberg Radio, and our YouTube audiences as we look at what's going on here. And Carol, in the final minutes before the closing bell, as Steve Sosnick was just telling us moments ago, it's a change from what we used to see, which is a bit of a rally into the close. Now we kind of have these swoons into the close.
Yeah, absolutely. And, swoon is the right word for the week. I'm just thinking of the NASDAQ 100. It's down, about 4% this week. So definitely, we talked, right, David, about this rotation out of some of these big cap tech names. We definitely saw it in the trade overall this week.
Yeah, Carol, just picking up on that, I mean, this has been an exhausting week. We've spent a lot of time talking about that over the course of the show today. But, we started with new comments from the Federal Reserve Chair. We saw, obviously, former President Trump on stage in Milwaukee talking about his plans for his second term. We saw the kind of resurgence as a result of that, of the so-called Trump trade. So a lot has happened here over the course of the week, and I'm particularly interested in sort of what we've seen in technology stocks in these last couple of days.
Last couple of days, and this week to end the week, really, this risk-off tone is pretty incredible. And if we were trying to look across
across the markets for a haven bid, and we could not find one, guys. I mean, maybe a little bit in the dollar. You see Bitcoin rising. Gold is down 1.9%. Even the 2-year is down. There is some serious risk-off attitudes going into this weekend. Political uncertainty and, of course, earnings uncertainty as well into next week.
Oh, Shonali, you just rolled your eyes at me when I mentioned Bitcoin earlier. We do have healthcare and utilities somewhat higher, so I guess that could be a kind of a place to find some safety. We know that those are dividend payers as well, so that provides some comfort. But look at that closing shot of the market right now. You have a lot of red arrows and pretty big red arrows too when it comes to Dow off by 0.9%, 40,290. The S&P 500 losing 0.7% at 5505, and the Nasdaq lower by 0.8% at 17,726. Worth pointing out as well that the Russell 2000 did finish lower on the day, but its decline is less than its big cap brethren. So off by 0.6%. Perhaps because of that, the rotation is still kind of on.
Kinda. We shall see. But yeah, kind of interesting to see how that's how it ended up. I'm going to go back to the big caps for a moment and just the S&P 500 today. And Shonali had most names in the index lower, about 367, 134 actually gaining some ground today, 2 unchanged.
And if you take a look at sectors here, it was pretty broad-based. You did have a little bit of green on the screen, as Scarlett was talking about healthcare stocks, utility stocks a little higher on the day, but really that was on the back of some earnings that we saw out of the healthcare sector that helped drag that part of the index higher. But energy, the biggest loser here at 1.3% out of the sectors, is pretty stunning when you have a week where energy was the biggest gainer in the middle of what was, frankly, a Trump trade.
Yeah, that was a lot of red that I'm looking at the screen right there for those of you who are listening on radio. Let's get to some of the individual gainers, if I may. Starbucks, right? We had a headline just about 2:40 Wall Street time today. You've got activist investor Elliott taking a sizable stake in the company, pushing to find ways to boost the stock prices. Come from the Wall Street Journal, citing folks familiar. So you saw a pop in shares of Starbucks up almost 7% in today's trade. A top gainer moving along to one that really was a standout in both the S&P 500 and the NASDAQ 100. Talking about Intuitive Surgical, tickers ISRG, finishing the day near its highs, up 9.4%. Initiated with an outperform and $21 price target over at Wedbush, which said the shares seem undervalued. So we did see certainly a big move. Oh, forgive me. That was Canadian Goose. Oh, mixing up my notes. Hang on.
Take your time. It's Friday.
That's because I added Starbucks. Hitting a record, company's second quarter adjusted earnings per share coming ahead of consensus estimates. Whew. Piper Sandler said this was an all-around positive update. We're talking Intuitive Surgical. Piper Sandler, Leerink, and Jefferies all raising their price target. Now to Canada Goose, up 2.5%. This one rallying after it was initiated with an outperform recommendation and a $21 a share price target over at Wedbush, which said the shares seem undervalued, which makes sense because the stock closed at $12.20 a share. And one more, Hawaiian Electric had to point this out, up about 37%. It's among the companies that have tentatively agreed to pay more than $4 billion to resolve hundreds of lawsuits over the wildfires that ripped through Maui last year. This is according to people familiar. So we saw, certainly, David, people moving into that one.
Yeah, absolutely. Talk about decliners. You got to mention CrowdStrike. Obviously, it's a huge story today, one that we all woke up to here on the East Coast in New York. The cybersecurity company suffering this failure that affected so many companies around the world. We saw that steep decline there. Mandeep Singh saying this is a company that has done so well for so long. It's just a total surprise, and we'll see what happens in the coming days as now the specter of potential lawsuits comes into play here. Who's going to have to pay the bills for what's happened here at airports and banks, all kinds of businesses all over the world. Comerica, that Dallas-based bank, reported earnings. Its outlook worse than Wall Street expected. We saw that bank shares decline as well. It's also being removed from a treasury program it had a contract with, a deal with, and not being asked to rebid for that. A huge problem for that bank. I should say it's also facing a lawsuit related to fraud allegations. So not in a great spot today. We saw declines there in Comerica's stock price as well. And finally, we've been talking a lot about politics, about the prospects for President Biden.
No, we haven't.
We have indeed, Carol. Former President Trump as well. DJT, of course, Donald Trump's Trump Media and Technology Group. He is the majority shareholder in that company. We saw declines there today, not attributable to what we heard or saw at the Republican National Convention in Milwaukee. In fact, having to do with the stock dilution, the fact that now there are going to be about $2.5 billion more shares available. That, of course, makes them worth less. Good for the former president, I should say. Maybe not good for other folks, but we saw DJT sinking today in trading on Wall Street, guys.
All right, let's take a look at what's going on in the Treasury space. Yields moving up, so price down, yields higher, the yield curve steepening as well. You see the 10-year yield moving up 3 basis points. That's the same for the 2-year as well, 4.23%. Carol, what was interesting to me, and this is not limited to Treasuries, of course, was the computer outage that we got overnight and this morning. It affected bond trading as well since the start of the New York session. This is according to Alice Anders, who is our U.S. rates and FX strategist over for our Markets Live blog. So it feels like no corner of the financial world was kind of untouched, and the business world was untouched by this massive computer outage.
Right. David and I talked a lot about the airline industry. I'm sure you guys did as well. Some headlines crossing. Delta says 1,200 flights canceled Friday, so extending the waiver that they're giving to customers, it sounds like, and says more delays, cancellations possible through the weekend. The FTA also was saying that, right, as well, that they anticipated that some of this could carry over into the weekend. So we'll be keeping an eye. We talked with Helene Becker over at Cowen, and she said they're treating this like a storm event.
So fascinating, like a winter storm. That's the kind of disruption that we've seen here.
I mean, the reality of this issue, too, is it's going to last people into the weekend, right? Because you had that many flights canceled, and then a number of those flights being rerouted, and a number of those flights being, redone for folks. But many of these people will be sitting in an airport for a day or two, or the airport hotel.
Yeah, not from the airport that they departed from, and not from the airport, not at the airport that they want to get to, but somewhere likely in between. At the same time, you have companies like FedEx and UPS warning of delivery delays from this outage. What's interesting to me, of course, is we had the Amazon Prime days earlier this week. So there are people who are buying things off Amazon, expecting them to get them today or tomorrow, and that's probably not going to happen now because of the delays triggered by this outage.
All right, let's get to what really matters. That unbelievably, companies are considering what cocoa butter alternatives. Is there any alternative to cocoa butter? I don't think so.
Wait, instead of chocolate, you mean? Instead of cocoa overall?
I guess so. I guess they're coming up because cocoa butter prices are what, $28,000 a ton?
We've seen the fallout from really weather events in Africa where cocoa is grown, and this has kind of been building over and over. There have been warnings about how much chocolate prices are going to go up, and I just love this piece on the Bloomberg. Niall Sands, president of a commercial development innovation alternatives maker, AAK, saying chocolate quite often is an impulse purchase, stating the obvious there, but one I'm guilty of purchasing.
How many of you have walked out of the Bloomberg headquarters and to the right is this incredible chocolate store? I've done it and eaten the chocolate before I'm even home.
I mean, the cocoa butter prices at near $28,000 a ton is just eye-popping at the end of the day, and you can see why people are looking for alternatives. So I do agree with you. I don't know what that would be.
I think it's really fascinating, David. I'm glad you brought up that quote because there was another quote in that story that said that they don't want to make chocolate a luxury purchase. They want to keep chocolate an impulse purchase, something that everyone has access to, and people can walk out the drugstore and be like, oh wait, hey, I need that 100-gram bar right now.
In an environment and like just being serious, right? We talk about inflation, right? And companies trying to figure out with still some of the higher input costs, they've got to figure out alternatives. Otherwise, they've got to raise prices to consumers in an environment, right, David? We were talking about this earlier in the retail sector where consumers are looking for value.
Looking for value, looking for deals. We saw it in obviously dining and restaurants first. Now we're seeing it move over to other products, other parts of retail as well. Buy 2 bars. If they're getting smaller, if there's shrinkflation, get 2 chocolate bars.
Like Twix.
Yes, that's right. Don't give it to a friend, have it yourself.
All right, guys. What a week, what a day. We'll see what the weekend holds, but be safe, and we will see you again, same time, same place on Monday. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it The Closing Bell. We'll see you on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, David, I don't know if you saw this. First of all, Carol Masser along with David Gura. I keep doing that. You know what it is? I'm such a robot.
Doing my best Tim impression. I know. Sorry.
No, I'm just like a robot that comes out of my mouth. It's Friday. I was up late and I was up early, and so this is what you get. David Gura, of course, in for Tim Stenivek, who has the day off. There was a story I saw on Bloomberg News. I think it was actually yesterday. It noted that the price of new initial public offerings and the formation of blank check vehicles, which we were talking about, I feel like go back a couple years.
Yes, they're very in vogue. Yes,
have both picked up amid a lukewarm market for non-SPAC U.S. IPOs. So a cadence of 10 to 15 new SPACs per quarter, which strike a delicate balance, offering an alternative to traditional first-time share sales without inviting comparisons to the mania of the go-go stretch from 2020 to 2021. Go back, right, off the pandemic, it felt like everybody and anybody, many celebrities, everybody was starting a SPAC.
A lot of SPACs, a lot of people learning what the phrase means. Our next guest has some thoughts on the IPO and SPAC markets. Back with us is Isabel Friedheim, the founder and CEO of Athena. It's an all-women-led SPAC platform. She's here to talk to us to why she thinks the SEC is stifling the IPO comeback. She's joining us today from Lima, Peru.
Can I say special purpose acquisition vehicle?
Thank you so much. You better than I.
Company, I should say.
Yeah. Isabel, just give us the lay of the land here. I mean, interest rates are still high, relatively speaking, but our colleague Preston Brewer at Bloomberg Law writing about how he thinks the IPO market has kind of turned a corner here. We are seeing more of them, seeing larger ones. What's your read of sort of where we are in the bounce back of the IPO market?
Thanks, David. The IPO market is turning a corner indeed. We have seen in the last few months a number of high-profile IPOs that have done decently well in the market. But to your point, interest rates continue to be high, as does inflation. So it is, and hopefully it won't be the case that the Fed will change interest rates from in a pattern that will go up and down. So we expect for now interest rates to continue to be steady for the most part. The IPO market itself is a reflection of investor sentiment, and it has been the case in the last 3 years. And to your point, has been to the detriment of SPACs, unfortunately, that investors have taken a risk-off posture when it comes to making investments in companies that are cash-burning companies that are high growth, typically tech or climate sectors. So we're seeing less of those going public now or going public through SPACs. And we are seeing more companies that are cash flow positive with industry tailwinds. But we're not quite there yet because there continues to be a lot of volatility in the market. And I think that will continue to be the case until the elections up until 2025.
Isabel, I feel like when we talk about SPACs, it's like it just goes through these cycles where everybody kind of, we start talking about them, there's interest, everybody plows into them, then everybody backs off because they don't perform. So I don't know, how do you make sense of, is there a healthy SPAC cycle?
Yeah, there is a healthy SPAC. SPACs continue to play a purpose in the market. They continue to be good for some companies. There have been abuses. And to your prior question on the SEC was very quick to jump on SPACs because of the amounts of capital that were flowing into SPAC products, which frankly has never been the SEC's mandates. So the SEC, broadly speaking, and that's not just true for SPACs, it's true for other areas of the market as well, it is in a way stifling companies' access to the public market by making it so difficult and so over-regulated to go public. And that's whether it's through a SPAC, through an IPO, through a direct listing. And that's not new. The administration currently, the SEC administration, has made it worse, certainly in the last couple of years. It's unclear why, frankly, and what they're addressing. But it has been 20 years now that the regulatory environment in the U.S. has made it difficult and costly for companies to access the public equity markets. And
yeah, I was going to say, David, it felt like for many years that the reason companies weren't going public is because they didn't need to. There was so much money in the private markets that they could stay private for an extended period of time. And in some ways that creates, I feel like, healthier companies, or some market observers would say that you stay private for longer, you do create a company that has a sustainable business model.
A fascinating point. Go ahead. Yeah, jump in.
When you have a strong private equity market, sure, but the venture capital industry exists because of exit opportunities that can be to private equity, but also primarily to the public market. So not only is it difficult for companies to access the public equity market, remember, the number of publicly traded companies has consistently gone down now almost 90% in the last 30 years. And there needs to be a recovery. And that's the role that SPACs played at some point. But of course, we've been operating in a challenging market. But there needs to continue to be access to capital beyond what the venture capital industry can offer to technology companies to fund innovation, because capital is the lifeblood of innovation. The United States has led for many years in that respect, and in the absence of exit opportunities, we're stifling access to capital, both in venture capital and in the public equity markets, and access for tech companies to the public equity markets. It's not just tech, it's life sciences, it's climate, companies that will solve tomorrow's challenges.
Isabel, I want to ask you just about sort of what regulators have said, and Gary Gensler is chief among them, who's certainly singled out SPACs as a place where he'd like to see the SEC do more. And I think one area on which he's focused is disclosure, that investors don't know enough, say, about who's sponsoring a particular one. Let me step back and ask you, sort of, what do you think the regulatory framework should look like for SPACs? And you've talked a bit about sort of the SEC's role and the scrutiny that's applied to special purpose acquisition companies. What kind of touch, how light a touch or how heavy a touch do you think that the SEC should have when it comes to these kind of offerings?
So remember that SPACs exist because they provided investors in 2019 and 2020 with access to high growth companies. Investments in those companies is challenging in the private market. It's risky. And SPACs, in a way, being publicly traded companies and taking companies public, makes for a much less risky investment when you invest in the same company, whether it is private in the venture market or as a publicly traded company. Now, there was a point in time when investors couldn't access yield in any other product than high growth equities. And that's why they piled into SPACs and into the promise of growth and yields. Now, the yields have shifted and they can be accessed now through other products, especially debt right now. So there's been a pullback and a natural adjustment I would say an overcorrection, but there has been a natural adjustment that the SEC has no business regulating, frankly. I mean, the disclosures is one thing to prevent fraud, but the disclosures are there. And sure, most SPACs these days proactively disclose more information than is required by regulators. And those are important to protect retail investors. So I'm very much in favor of disclosures.
Isabel, just got about 45, 50 seconds left here. I mean, what is it that we get for companies or for investors, via a SPAC versus angel investing or VC investing? And again, we don't have a lot of time, unfortunately.
You get the transparency, you get the liquidity, you can sell your shares that you cannot sell in an early stage company. You get the access to full disclosures, to your point. So that's taken care of.
All right, gonna leave it on that note. Listen, great to get some time, something to think about on this Friday, right? We actually talked to, I think it was Ardent Health yesterday, an IPO. So we are seeing some things happening in the IPO market.
Yeah, I was going back to that article by our colleague Preston Brewer at Bloomberg Law. He's saying, although they're not among the largest IPOs, biotech companies are seeing a resurgence. Total capital raised in the first half of this year, $21.2 billion. So things directionally seem to be going in the right place. But again, this conversation about regulation, a roiling one, has been for a few years. And as we talk about the election, what might or might not change, certainly something I think that's on a lot of voters' minds.
Absolutely. Isabel Friedheim, she is the founder and CEO of Athena, the all-women-led SPAC platform, joining us from Lima, Peru. All right, folks, you are listening and watching Bloomberg Business Week. This is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Sources tell Bloomberg a couple of thousand of J.P. Morgan Chase ATMs are down following that global IT outage. Some teller stations also said to be not working at J.P. Morgan's sprawling retail banking network. It does say, however, most are working. J.P. Morgan has about 16,000 ATMs and more than 48 branches in 48 states. Shares of JPM, they're trading lower today, down by 0.1%. The Dow, the S&P, NASDAQ end the week in the red, losing week. S&P finishing the week, heading into the weekend at 55.05, lower today by 39 points, a decline of 0.7%. The Dow down 377, a drop today of 0.9%. NASDAQ down 144, a decline of 0.8%. 10-year 4.23%, the 2-year 4.51%. Gold down 1.9%, 23.99 the ounce. West Texas Intermediate crude oil down 3.9%, 80.26 a barrel. Schlumberger and Halliburton, two of the world's biggest oil field services providers, said they see strong international demand for crude drilling after posting earnings that met or beat estimates. Recapping, stocks lower, S&P down 39 today, a drop of 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thanks very much. David Gura in for Tim Stanovic with Carol Masser on Bloomberg Business Week on Bloomberg Radio on YouTube. I did have an ice cream. Many
Friday
thanks
ice
to the
cream
whole team for that, bringing that into the studio. I astonished Carol by how quickly I ate said ice cream.
Part of mine's melting a little bit, but go ahead, David.
I digress. We've been talking a bit about what former President Donald Trump said in that speech to the Republican National Convention last night. He used that speech in part to take aim at President Joe Biden's electric vehicle policies. He talked about the EV mandate. We don't have time to talk about if, in fact, there is an EV mandate. But he vowed to take action against them on his first day in office. And while EV sales have softened, hybrid sales have been ticking up. And that's what we're going to talk about today, just the growth that we've seen in hybrids broadly, but in the luxury space in particular. With more, I want to bring in Bloomberg auto columnist Hannah Elliott, who is joining us from our LA bureau. You can find her podcast, which she hosts with Matt Miller, Bloomberg's Matt Miller, Hot Pursuit, at bloomberg.com/podcasts. Hannah, we'll get to the hybrids in a sec, but let me just get your, I'm not going to put you on the spot. Did you watch the speech or not watch the speech? But I am curious sort of what you make of the fact that cars and EVs in particular are, if not central to this campaign, a part of it. There's something that the candidates are talking about when they're on the trail.
Well, the first thing that I think when you say that is that cars are very relatable. If you are an American adult, you probably have a car, and you might even have more than one cars. So they're a very relatable thing. Everybody has car stories. And on top of that, they have become increasingly politicized in the last few years, largely because of EVs in particular. So they're a relatable thing, and they've become more of a hot button item. So it just makes sense that when we're talking about where the country is going, we are at a really interesting point in the car world where there's a lot up in the air and nobody knows what the future is going to bring in terms of what's going to be powering our cars. So it's an exciting time, for sure.
Hannah, does that mean some of the big global automakers, are they thinking, well, maybe we tweak our strategy based on who's in the White House, or no? Or for them, they kind of have picked their strategy a couple of years ago?
That's really interesting that you asked that. Yesterday, I was on calls both with Stefan Winkelmann, the CEO of Lamborghini, and with Mate Rimac, the head of Rimac and Bugatti, who's also working with Porsche. And I asked both of those CEOs the same question you just asked me. Both of them said, we'll be fine either way. Mr. Winkelmann in particular said, hey, we're friends with Mr. Biden, we're friends with Mr. Trump. They both have visited the factory. He in particular felt very comfortable either way.
You write that hybrids were supposed to be the way station on the road to electric cars. Maybe I'm paraphrasing there a little bit, but my perspective on all of this is when I see hybrids, I'm thinking, oh, maybe this is because a company hasn't developed the technology to go all electric. They're not there yet. Struck me reading your column. No, that's not the case. You bring up Lamborghini. I mean, I was just like gobsmacked. Lamborghini has not one hybrid, but three. Why have we seen them doing so well? Why have we seen them become not this way station, but something in which a lot of these companies are investing a lot of time and resources and money?
It's been really interesting to watch. I think the short answer is hybrids help automakers reduce carbon emissions and meet mandates for emissions, CO2 levels across the fleet. So that's the short answer. Hybrids do help automakers reach those goals and those mandates. On the other side of things, and more philosophically, you're right, hybrids were, initially kind of a Band-Aid, really. Of course, the Prius hybrid, the Honda Insight, these were like early hybrids that were kind of just like crutches in a way. But since then, automakers, especially in the luxury sector, have seen that a hybrid motor attached to, or an electric motor attached to a combustion engine can kind of get us the best of both worlds for performance. For instance, you get that instant torque and instant acceleration of the electric power, but then you also get the longer range of power from internal combustion, longer power band, sorry, and of course you don't have to worry about electric range on internal combustion. So it kind of combines the best of both worlds from a performance standpoint as well.
Well, in our actually Bloomberg Business Week weekend show, we talked with you about the Porsche 911 Carrera, the first hybrid Porsche 911 to come out. You liked it, right? You liked how it drove.
Yeah. Yeah, and I am a skeptic. I've been of hybrids in particular because, to your point, I did just kind of think, hey, if we're going all electric, let's just go all electric and be done with it. We don't need to wait in the middle. But actually, it really has emerged that the hybrid powertrain, like in this 911 that you mentioned, does get us a little more performance, a little more power, a little more speed, but it also retains that really fun driving feeling that internal combustion provides. Somebody said to me, yeah, you can microwave beef, but grilling makes it taste better. And that's kind of a funny way to look at it, but it's also kind of true with cars.
You actually said exuberance, I think, in that review. You liked it. You liked it.
Yeah, I did. Yeah, I mean, it felt like a regular, normal 911, and that's something we don't want to lose, and that is the danger of going all electric, that you lose that soul.
As you look down this road to maybe getting to all electric vehicles, where are we? And I talked about the softening at the top of the segment. Has that led to a delay in getting there? So I guess what I'm saying is, what's the industry's perspective on this broadly? Are they content now to kind of stick with hybrids, see if they get more widely adopted? Are they not as all in, I guess, on electric vehicles as they might have been before?
Yes, the answer is yes. There's been a massive recalculation. For instance, Mercedes in particular, in May, up to May, they had said by 2030, all of their cars are going to be electric, pure electric vehicles. In May, Ola Kalinius, the head of Mercedes, said, actually, never mind. We're going to be selling hybrids well into the 2030 decade and beyond, as long as people want them. So yes, there's been a really big calibration adjustment, if you will. And again, Mr. Winkleman at Lamborghini told me when I was asking him for this story, he said, look, actually, we feel great about just starting hybrids now, because within the generations of the cars, that gives us another 10 years where we can kind of just sit in the hybrid space without having to commit to electrics. If no one's asking for it, if the infrastructure isn't there, they can sit here for a while and just wait and see.
I really desperately want the VW electric van. Like I have had a series of very lame cars, including the crutch you mentioned. I leaned on the Prius for a while, but I like this VW. Is it a mistake to go that route in light of where we are in this evolution?
To buy something fully electric?
Yes, particularly a minivan made by
so
Volkswagen.
No, I don't think so at all. Every analyst, whether it's from J.D. Power or Cox Automotive, or our own Bloomberg Intelligence guys, they all are saying eventually we will be in the world of EVs, of pure electric vehicles. It's just going to take longer. That's what everybody's saying. They're not saying don't buy an EV. In fact, the EVs now are better than they ever have been, and we have more options than they ever have been. The real message is, hybrids are actually going to be here too for a while. We thought we might just kind of skip over them, and they're going to be here, and we've got some expensive options for hybrids too.
Hey, listen though, am I reading this right though? Some of the high-end auto folks, they're skipping hybrids and just staying in the EV space. I'm thinking about Rolls-Royce. Yeah. So if the VW doesn't work out,
really Rolls is a good backup, I think, for me, Carol. Yeah.
So yeah, to your point, David, you're absolutely right. There are still some brands that are saying we're 100% into EV. We're not going to just stop on the hybrid. Rolls-Royce is probably the most prominent. They had their electric Spectre, this two-door, really beautiful electric vehicle. They've said from day one, we're not going to do it halfway. We're going to go full electric. And then Pininfarina, this Italian brand, is also going full electric. Rimac, of course, is going full electric with their hypercars. So everyone's making their own decision about what suits their company best, I think. And EVs in particular, I think, are ultimately going to win out, but hybrids are here for the time being too.
Hey, just 30 seconds. Is it because of range or is it because we can't find charging, places to charge? Real quickly.
The charging infrastructure is a massive problem. I myself had an electric vehicle towed yesterday because I put it on the wrong charger. It's a whole story, but the infrastructure is really a challenge still, and those concerns are valid.
Hopefully coming to a column near Hannah soon. We hope so.
It's a great piece, and I love the history. The history in there is amazing too, and I just think about hybrids have been around a while. Maybe we're at a place where we're kind of like getting it right.
I also feel like it's like when the high end started doing SUVs, we're like, it's never going to happen. And then the same thing with kind of Lux doing EVs or hybrid. Hannah Elliott, always fun to talk with you. Have a great weekend. Bloomberg auto columnist Hannah Elliott joining us. Check out all of our columns. Find them on the Bloomberg and at Bloomberg.com. Coming up, we're going to get into why CFOs actually make good CEOs. We'll get to that in just a moment. Back to World and National News. Back to Amy Morris in D.C. Hey, Amy.
Hey, Carol. President Biden remains isolated at home with COVID, but now his doctor is saying that he is improving. Biden himself says he plans to return to the campaign trail next week. This is as 34 lawmakers now openly calling for Biden to step aside. But campaign chair Jen O'Malley Dillon on MSNBC says they're sticking with the president.
We are about to head into our convention. We're about to head into, the delegates of this party who are there for Joe Biden. Those delegates are going to nominate the president as the candidate moving forward and as our nominee, and they're staying with the president.
And Vice President Kamala Harris now reportedly has met with those major Democratic donors. Lawmakers would like to hear from CrowdStrike and Microsoft officials about today's global IT outage, which is still ongoing in some places. They are planning for hearings on Capitol Hill. Computer systems at airlines, banks, and businesses around the globe were disrupted after a botched update of the cybersecurity program took down Microsoft systems. Bloomberg Intelligence senior technology analyst Mandeep Singh.
A good thing for them is it wasn't a cyber attack. It was an outage because of their own code changes, and they have rolled it back. So that, I think, makes it short-term in nature.
Bloomberg Intelligence senior technology analyst Mandeep Singh. CrowdStrike says all Windows computers affected by today's global IT failure need to be manually rebooted. Wall Street Journal reporter Ivan Gershkovich has been sentenced to 16 years in a Russian prison after being found guilty of espionage. He has denied any wrongdoing. The Wall Street Journal has called the case a sham, and the U.S. government says Gershkovich was wrongfully detained and condemns the charges. The conviction, though, does open a door to a possible prisoner swap with Russia. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks fell at the end of a wild and busy week with results from tech giants set to arrive next week at a critical moment on Wall Street. Next up, Tesla and Google. Most groups in the S&P 500 fell today, with the gauge having its worst week since April. Now, on the week, we had the S&P down by 2%. That is after a rotation that saw investors trimming positions in this year's winners in favor of laggards. So here's where we end the week. S&P at 5505, down 39 today, down 0.7%. The Dow dropped 377 points, down 0.9%. While NASDAQ was down 144, a drop today of 0.8%. 10-year yield, 4.24%. The 2-year, 4.51%. Spot gold down $46 the ounce to $23.98, down 1.9%. West Texas Intermediate crude down 3.1%, $80.26 a barrel on WTI. Bitcoin up 5.1% today, 67,063. Bottom line, lots of selling today. Tracy McMillian is head of global asset allocation at Wells Fargo Investment Institute. And right here on Bloomberg Business Week, she told us she is holding off on election bets for now.
We probably would want to wait until we get more confirmation about, who's at the top, at the, who is the presidential candidate who has been elected, and then we'd want to see how Congress also has shaped up after the elections.
Tracy McMillian of Wells Fargo Investment Institute. American Express shares did move lower today after earnings. AXP, American Express, down by 2.7%. Again, recapping, stocks lower. S&P down 39, drop there of 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thanks very much. David Gura here, in for Tim Senovic with Carol Masser on Bloomberg Business Week on Bloomberg. Great to be here.
It's great to have you here. It's like going back. You and I did a show.
Yeah, we did.
We did Bloomberg Business Week, like years ago, the
wild.
Weekend show. Remember that?
And I feel like we talked to like 30 people a week
We did.
in a period of like 3 hours.
Went through the magazine, right?
Yeah, and it was always so fascinating.
Yeah.
People with so many different perspectives on so many different things. And this next interview is no exception to that.
Yeah.
Beth Cowett, who's a columnist for Bloomberg Business Week, writing about the trend that we're seeing among chief financial officers being elevated to the position of chief executive officers. This is happening with greater and greater frequency. And before we get to Beth, I'll just allow, I did a taping for this show that we have here at Bloomberg called Chief Future Officer, kind of looking at the role of chief financial officers and how that's expanding. And I sat down with the CFO and the CEO at Johnson & Johnson. We talked about this and how, the role has changed so much. Like they kind of get this reputation for being counters, being good with math, having to figure all of that out.
Accountants is like what comes to mind.
But now, like assuming a lot more strategic responsibility. And Beth Cowett joins us now from New York via Zoom. Beth, great to speak with you. As I bring up that anecdote, again, no transition happening at J&J yet, but both very eager to comment on the fact that they see the CFO role as incredibly valuable. Talk a bit about that, if you would, just the way that our notion of or that role has changed here in recent years.
Yeah, that's a really, I'm interested to hear that, because anecdotally that is what I was hearing across the board too. Seeing more CFOs promoted into the role and just hearing in general that financial talent is in really high demand. And I think to your point, we are seeing an increase in responsibility for CFOs. So I think that is driving the trend. They're being given more operational experience to better prepare them to possibly take the top job. But I also think that it's a little bit of a symptom of what we're seeing in corporate America more broadly right now. And that is kind of a push toward cost cutting, toward efficiency. And, I think the CFO is someone who is very adept at that and therefore, really in high demand right now.
Efficiency, productivity, right? These are things that certainly CFOs get into. But I was also thinking about, Beth, certainly during the great financial crisis, again during the pandemic, that CFOs had to work so closely with their companies. It was about survival, right? Like figuring out what needed to be done to the balance sheet and make sure there was enough cash on hand to get through both of those crises. I really do feel like, especially the GFC, CFOs really rose to prominence.
That is right. And I think we're seeing right now too, just in times of uncertainty, which we are most certainly in, I think boards tend to look for the steady hand. Some might even say boring hand. And I think CFOs definitely also fit that bill a lot of the time. And they're also known by the board. They're known by investors. And I think that also gives them a boost.
Beth, you point out a few companies where this has happened recently. Freeport, McMoran, DuPont, Newell Brands have had this phenomenon happen there. We've seen CFOs elevated. Can you give us a sense of how that's working out? I mean, is it too early to tell? This is over the period of the last, year and a half, but any sense that you have of how effectively that's working at those companies and sort of maybe what those leaders have brought to the executive ranks there?
Yeah, I think it's a little too early to tell in those cases. Those transitions have happened in kind of the last 18 months. But interestingly, there is data that exists out there that actually CFOs tend to be more likely or the least likely to outperform, which is kind of interesting. That's not to say that a CFO should not become a CEO. I think it's just more a function of they need to be aware of some of the shortcomings, and the board does too, in order to help them kind of get over those hurdles. And that might be a focus on profitability over growth.
What do you hear from headhunters and search firms that specifically when they're looking to fill a CEO spot, are they bringing up more and more that, hey, listen, we're interested in folks that have been a CFO?
I think it's CFO, but I think it's financial talent more broadly, someone who has that background. But it's kind of CFO, financial talent plus. Like they want someone who also has operational expertise, who has not just been kind of in that CFO the whole time, but has maybe run a business, maybe also been promoted into the president or COO role, which we've seen in a couple cases now. So I think that they're finding that maybe just CFO alone is a little too narrow, and that they need to kind of have these other expertise as well, that the finance background is not enough. And of course, this varies by industry, right? Different in finance and in banking, but this is sort of more general.
It's funny, I was talking to that CEO at Johnson & Johnson, Joaquin Tuato, and I said, what are you looking for in a CFO? What's good about the CFO that you have? And he said, he's not a generalist. And I think that he kind of wants him to be engaged with certain aspects of the business. And if he's using that person as a sounding board, he wants that person to bring particular experience or expertise to bear. Beth, I'm curious sort of where this hasn't worked out. In your piece, you flagged Boeing as an example of this, and maybe this is where you have somebody in a job or people in a job who have kind of a narrower perspective, who are purely focused on the numbers and the financials, and that's backfired. What lessons can we learn from that circumstance where Boeing did elevate somebody who was at CFO before?
Yeah, I think the big risk here is when promoting a CFO is a symptom of a bigger problem, and that is cost cutting being the focus, because that can easily kind of cross over into cutting corners when you're not careful. And I think Boeing, that is a prime example. They had a succession of very finance focused executives who came from a couple of them came from GE and sort of had the Jack Welch playbook of cost cutting, outsourcing, and people sort of really have pointed to those issues as to blame for a lot of the very serious issues that they're facing right now. Sort of too much of a focus on profitability rather than, let's say, quality product.
Are you finding too, that CFOs are being kind of spread around the company, like maybe another kind of C-suite position or head of another division, just to get a better picture of the company, and that kind of grooms them even better to maybe take over the CEO job?
Yeah, definitely. And I think in this data I mentioned where CFOs actually were least likely to outperform, some of the other roles that did better were COO, were what they call leapfroggers. So people who kind of come from lower down in the company, but maybe are running a business line, and same with division heads. So I think having that operational background is huge. And the data did show when a CFO had that experience, when they maybe did also run a division or were rotated through some of these other roles, that did really help with their performance, and they were more likely to outperform.
I remember Bob Iger. He swapped. It was the head of parks and the CFO jobs, and they like switched jobs, and it was seen as like kind of possibly being the heir apparent. I will point out that neither of them became
mystery. Yes, didn't come to pass.
It didn't work out that way. Hey, Beth, have a great weekend. Fun to check in with you. Bloomberg Opinion senior columnist Beth Kowich. She is helping us get like closer and closer to the weekend.
There you go. We're nearly there. Nearly there.
Just about 10 minutes. Hey, guys, don't go anywhere. Carol Master, David Guru. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Starbucks shares jumped 6.9% today after the Wall Street Journal reported that activist investor Elliott Investment Management has built a sizable stake in the coffee chain. This, according to sources, shares of Starbucks again up by 6.85%. Eli Lilly's Mounjaro has gained Chinese regulatory approval for weight loss less than a month after a similar therapy from Novo Nordisk fueling competition in a nation that is among the world's most severely hit by obesity. Today we had shares of both companies advancing, Lilly up by 1%, Novo Nordisk up by 1.2%. Lots of big questions today about that CrowdStrike global computer outage that disrupted travel, trading, and banking services worldwide. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence.
The fact that CrowdStrike rolled out a code update that could bring down the entire airline systems. Just goes to show how interconnected these environments are. And CrowdStrike, the good thing for them is it wasn't a cyber attack. It was an outage because of their own code changes, and they have rolled their back. So that, I think, makes it short-term in nature. But clearly, the fact that Windows functionality could be changed by another software provider rolling out an update raises a lot of questions here.
Bloomberg's Mandeep Singh, CrowdStrike CEO George Kurtz says the company has identified the update that crashed Windows systems around the globe. He says a fix has been deployed. He also apologized. CrowdStrike shares today plunged by 11.1%. And those are our top company stories at this hour. And this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
David Gura in for Tim Stenevec here with Carol Massar on Bloomberg Business Week. Minutes away from our weekend.
I'm
it's
counting,
coming.
baby.
We're on the precipice.
4 minutes and 33 seconds.
As Carol counts.
As much as I love everybody.
I know. Love you too. Let's get a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Amy?
Hi, David. President Biden says he plans to return to the campaign trail next week. It is the latest signal that Biden is determined to stay in the race, despite prominent party leaders urging him to reconsider. Vice President Kamala Harris, who is seen as the most likely to replace Biden at the top of the ticket, echoed the sentiment in a call today with top party donors extolling Biden's virtues. Now, Biden's doctor says he's making meaningful improvements after being diagnosed with COVID. He continues to isolate while working from home. Still, up to 34 Democratic lawmakers are now calling for Biden to rethink his election bid. Robert Casey of Signum Global Advisors tells Bloomberg any decision must be imminent.
This weekend is the most important of Joe Biden's political career. Every weekend, the question of whether or not Joe Biden is going to drop out. Joe Biden can't have it. Senate Democrats, House Democrats, who are running very tight races. Congressional leadership going more public with further pressure on Biden to step aside.
NBC also reported members of the Biden family were discussing what a possible exit strategy might look like, but the White House says that report is just wrong. A major IT outage left its mark around the globe. Airlines, hospitals, banks, shops struggling still to get back online. The cyber outage was caused by a Windows update overnight by cybersecurity company CrowdStrike, and Microsoft says it is working with companies to get them back. CrowdStrike says people should reboot their computers. House lawmakers are calling now for hearings. Wall Street Journal reporter Ivan Gershkovich was found guilty of espionage by a Russian court and sentenced to 16 years in prison. Gershkovich, his employer, and the U.S. government all vehemently deny the charges. Still, this could pave the way for a prisoner swap with Russia. Global news 24 hours a day whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Massar and David Gura.
You have a great weekend. Amy Morris, thank you so much. That is correct. Carol Massar along with David Gura. We're getting ready to wrap up on this Friday. I'm looking at the most read stories in the Bloomberg. I'm just trying to get my head around when I was reading in this morning, listening in.
What you were focused on.
Everything, right?
Was it politics? Was it markets? What was your...
It was mostly this IT glitch and just this, shutting down of systems and what was the impact. I thought it was going to be... I'm not saying it wasn't dramatic. There are people stranded at airports and so on and so forth. But the markets, they're lower, and I think there's a lot of other things going on. But I feel like it could have been a lot crazier.
I think that's true. I mean, I was kind of wondering how bad it could have been. I think this will be a moment where a lot of us pause to think about how dramatically worse it would be had there been a hack and information were taken.
If I opened up my 401k and it said zero,
there you go.
That would have been upsetting.
Jamie Terabay, our colleague in D.C., talking about how she's closely watching to see how people might have exploited that vulnerability or what's going to happen here in the coming days. Clearly a story that's not going away, but as you say, I think one that could have been a lot worse.
How are you thinking about politics going into the weekend?
It's been minute by minute for what feels like 2 or 3 weeks now. I mean, I covered the debate down in Atlanta, and it seems like it started then. So we have Joe Biden still recovering from COVID.
Only 2.5?
3 weeks ago, which is crazy to think, but how much has happened since then? So he is, at his home there, self-isolating as he deals with illness that many of us have had and had to deal with. All the while, the whole political terrain has shifted. President Obama reportedly saying that the path to his reelection is untenable. He's had outreach from senior members of the Democratic Party, donors